Hello, everybody. This is Mark Hill, wealthmotivation.com, author of The Secret to Prosperity. Today, let's talk about Visa and Mastercard as an investment, not as a consumer. We're looking at it from an investment point of view. You want to be an investor, not a consumer. Think like an owner. Okay, let's look at the stock chart for Visa. I'm going to tell you right off the bat. I've been trading in and out of Visa since around 2014, and I've never lost money on a trade with Visa. We're looking at the chart. You can see all the way this 10-year chart going back into '09. This had a little hiccup in 2010, but every time the stock has seen a sell-off, it's proven to be nothing but a buying opportunity. Visa and Mastercard are just like, it's a duopoly. I mean, it's just like Boeing and Airbus in that industry. They are the two main players worldwide, Visa and Mastercard. And we look at Mastercard's chart on a short-term viewpoint here. Right off the bat, I'll tell you, I like Visa a little bit better than Mastercard, but they're both great companies. They're both leaders in they call it the financial technology, fintech industry. You can't really go wrong with either one, but I prefer Visa as a slightly safer investment because they're number one in terms of popularity around the world. Um, we can look at, since this long-term chart here of Visa back in '08, it was around $15, $20 a share. Now it's about peaked out at 150 a share 2018. I mean, that's about 700%, a little bit more than a 700% gain in 10 years. I mean, they also pay a dividend, a small dividend, but it's a dividend. And so they give off a little passive income while you hold the stock. And they've been ever increasing the dividend. Uh, you can check the dividend increases. They're rapidly increasing this dividend to shareholders. You see, in 2018, they made an increase after only 3 quarters. And that's significant because most companies wait till 4 quarters, a full year, to raise the dividend. I mean, they're growing profits so fast that they raised the dividend before the whole year was over. I mean, that's a good sign. Even back in 2017, you see they raised the dividend. Let's see how many years in a row. 10 years in a row they've been raising the dividend. Payout ratio is only 20% of the earnings. I mean, so they have a massive amount of room to raise that dividend higher and higher over the long term. And you can see they raise it about 20 to make almost 30% annual increase. So I like the dividend, and it's rare to find a sort of a technology company like Visa and Mastercard that raises the dividend, that has a dividend. You know, most high growth companies, they just reinvest all the money into the company, but they share with the shareholders. But even more important than the dividend with this company is just the growth. The growth is phenomenal. the future is phenomenal for Visa and Mastercard. You can see in that little 3 month sell-off we had in 2018, that was just a buying opportunity. It went from 150 to 120, and you know, people who are knowledgeable and know to really buy when other people are fearful. I mean, that was a good buying opportunity. Like I said, I've traded in and out of Visa for many years, and I've made a profit. But in hindsight, this is not a company I want to trade anymore. I just want to own this company. It's too early in the growth cycle to trade, and they're paying a dividend. They have so much growth ahead of it, ahead of them, that in the credit card industry, that there's really no reason to trade. You might as well just sit back and let it ride for a few years, and that's what I plan to do in the future. Allocate a portion of my portfolio to Visa, um, and sit back and just let it ride. Let those profits ride. Let it keep going up. Right now it's at $140 a share. Um, they got a price target of 162. I mean, I have a longer term price target. It could easily be in the 200s. Well into the 200s, $250 a share within the next 12 to 24 months, 1 or 2 years. It'll easily be over $200 a share, unless it's some kind of major recession, global recession that they're predicting. But that would just make me want to buy more and dollar cost average. Because over the long run, even if we hit a little small recession or a short term recession, nothing is going to stop the movement towards a cashless society. That's the momentum it's headed towards. Less and less people carry cash anymore. They either use a debit card or a credit card. And every time that card is swiped, Visa and MasterCard get a fee from the store owner. So Visa really has no risk. They don't loan you the money. The banks loan, the credit card is through the banks. The Visa just has the system. Visa has the logo, and they collect a fee. You know, they aren't loaning any money. They collect a fee every time they swipe their cards. And I know credit cards seem normal in the first world, US, Canada, etc., but only about 20% of the world population uses credit cards right now. Most of the third world countries and non-westernized countries aren't, credit cards aren't that normal in everyday usage. But it's going there. And nothing's gonna stop it as technology gets better and better, and the middle classes society start middle class incomes start growing around the world. More and more credit card usage is going to be more and more frequently used, and cash less and less used. So just think about that growth potential. And more stores are preferring cash because of the safety, and because look at here, this is on the Visa website. Merchants, store owners make more money when people use cash, when they accept credit cards. It says for dining or takeout, a consumer usually spends 25% more on credit cards at pizzerias, 33% more at diners, and 40% more when a family is at a restaurant. They know that people is going to spend more money when they use that plastic rather than cash. So that's another reason they're just gonna keep pushing it and pushing it on the world. And it's really they've got the governments on board. I mean, so whether it's good for the consumer, it has its pros and cons for the consumer, but it's all benefits for the corporation. I mean, but it helps the consumer. I mean, less robberies on out in the streets. You don't have to go to ATM machines looking for cash. I mean, that helps the consumer that way. Um, we can look at Sweden. Sweden is a forerunner in this cashless society that's coming around the world. It says that Sweden is the most cashless society on the planet. Only 1% of all payments are made using paper money or coins. So 99% of people in Sweden use credit cards when they buy everything. Okay, that's where it's headed all around the world. I remember traveling around in the Caribbean about 4 or 5 years ago. Some grocery stores would only accept cash. Now those same grocery stores are now on the credit card acceptance uh, game plan. You can go to poorer countries. I mean, credit is being distributed more freely around the world, even in so-called third world countries. So the future is here. The growth is just phenomenal. The growth potential is phenomenal. The dividend is there, and I like it. I like Visa as a long-term investment. I mean, all the way around, it's a good investment. All the way around, it's a duopoly. They're the top three. They're the top company out of all the big three. This graph, this map here shows you um, how Visa is number one, the most popular card around the world. Visa is the most popular in 123 countries. Only 23 countries have American Express and 22 countries have Mastercard. So Visa is like miles ahead of the competition of Mastercard and American Express in terms of popularity around the world. I mean, all three of those companies are great investments, but why not? I'm gonna go with the number one leader first, which is Visa. So let me know what you think. Let me know what you think about the future of credit card payments and financial technology and just Visa as an overall investment. Where do you think it's a great investment? Like, share, subscribe, leave a comment. Thanks for listening. Have a great day.